Market profile, and what information does it provide you, the trader? Market profile is basically a summary of the entire day's action or transaction between buyers and sellers. It puts it in a nice, neat, easy to understand package, separated by sections or time, 30-minute time frames, labeled A through M, and it gives you so much information to help you, the trader, decide on direction or answer a critical question. What is the market doing? How you guys doing? I am David with Alexander Trade and Investment Group, and hopefully you guys see on my screen an example of a market profile. TPO is also what you may hear a lot of traders describe it as. TPO stands for time, price, opportunity. But just we're gonna just call it market profile for today. And I want to focus just as a beginner's discussion on market profile and what is market profile. Also, like I said at the top of the video, what information does market profile provide you? And it does provide you quite a bit of information: time, price, value, volume. It also allows you with the shape. So what you're seeing right here, and let's focus on one in particular, right here. This market profile right here, which is December 26th's profile, Thursday, December 26th, just by the shape of this profile here, it tells you so much information. Now, there's a couple different ways to look at market profile. Here, you're looking at the standard way of looking at market profile, still divided in 30-minute time frames. Again, they're lettered from A to M. Some are lettered from A to N, depending on what you trade. But this is the standard way of looking at market profile. There's also another way of looking at it. It's called split. And we're going to get into that in a minute. But that split profile actually gives you another piece of information as well to help you better answer the question, what is the market doing? So first of all, what is market profile? Market profile was basically introduced in 1985, and it was basically used to mock pit trading. So basically, before electronic trading became a big thing, computer trading, you had guys on the floor in the New York Stock Exchange. They're called pit traders, actually walking around with a pad in their hand, and they will mark what's going on, whether there's buying and selling, and in what time frame. Again, market profile is divided in 30-minute time frames, and they're lettered. So the first 30 minutes of trading from 9:30 to 10 is the A period. All right, 10 to 10:30 is the B period, and so on and so on. And I'm gonna show you that as well once we get to the split trading or to the split style. But it's basically created to mock what the pit traders were doing before electronic trading became so popular. So this is something that professional institutional traders use since the beginning of even before the electronic trading. This is a concept or a way of trading to understand what the market is doing. And in so many years before me myself has ever even thought about getting into the market, and before I was even born, to be honest with you. So this is a very important tool. Again, this is going to be more of a beginner's way of looking at it. And at the end of the video and in the description, I'm going to post two books that I read that was actually assigned to me to read that really helped me understand market profile. So let's take a deeper dive. Again, a beginner's guide, but hopefully this will spark your interest to using market profile. So again, we're going to focus on this profile here, which is December 26th. And this is the standard way of looking at market profile. Again, this is broken up. If you look at the bottom as I move my cursor, you're seeing right now December 26th, 2024 at 9:30. If I move it over one, here is 10 o'clock. Again, 10:30, so on and so on. So again, market profile is broke up in 30 minutes. So you're really going to see that once we split it. All right, but this is the traditional way of looking at the profile. And this way actually gives you another piece of information, right? So it tells you time, right? It tells you the time that we move from 10:30 to 9:30 to 10, 10:30 to 11, so on and so on. So that gives you time. Price, right? So as we're his TPO here, focusing on the first TPO, 9:30. We're seeing prices up in the 226.16 area. If we keep going down, we're seeing 225. So it's giving you the time and the price, and then volume, right? So as you see, this shape is more like a P shape, right? Here's the bottom of a P. Here's that oval of the P. You can see this is where volume took place. So this is where the bulk of trading between buyers and sellers, the transactions between buyers and sellers really took place here, right? So not only, again, it's giving you time, price, and volume, right? So, or i.e., time, price, and opportunity, TPO. All right. So with this shape, it's telling you potential volume, right? So what the shapes are doing, looking at the traditional way of looking at it. So let's start with December 23rd's profile, which is right here. And we're going to move over to the 24th and then the 26th. Value, and hopefully you guys can see the shaded blue or gray area between value high and value low. That is considered the value of that entire day, right? So this is the 70% of all transactions that happen this particular day, the 23rd, the 24th, the 26th, so on and so on. And this is considered value, the value of what we're looking at, IWM. And it doesn't matter which auction you participate in, you can always find the value of whatever it is you're trading. So on the 23rd, value was between roughly 221.48 down to roughly 220.26. The next day, which is the 24th, 23rd, 24th, value has creeped up. You can see the shaded grayish, bluish area value has ticked up for IWM. Now, if you want to think about price, value and price has ticked up from the 23rd to the 24th, right? Because we opened here roughly 222.07 and closed roughly around 223.36. So not only did the shaded gray area, which is value, go up from the day before, but also price. And then if you look at the day that we're focusing on, I have my arrow, December 26th, value has gone all the way up into here between the 225.76 area down to the 223.78. That's all value from the day before, and also price, right? Price is here from the 26, roughly 222.38. It ended up at the end of the day 225.61. So value and price has creeped up. So again, we're not, if you looked at the video that I posted a couple of days ago, the difference between plain candlesticks and order flow, you're getting not only price, which what a plain candlestick focuses on primarily, but you're also understanding value, the value of, in this case, IWM. And again, it doesn't matter which auction you choose to participate in, you can always find value. If you want to go to Apple, if you trade Nvidia, if you trade Amazon, whatever it is you choose to trade, TPO market profile will provide you not only time, price, volume, but also value. And you're seeing the value of other participants, buyers and sellers, transaction pushed value higher. And then you can see from the 26th down to the 27th, value has actually fallen. Not only did value fall, but price did too. So on the 27th, Friday, it opened roughly 224.39 and landed roughly 222.42. So not only did value fall, but price did as well. So that P turned into a B. You can see here's the top of a B, here's the oval shape of the bottom of the B. That's giving you price. It's telling you how long price stood around the 225 area, and it's giving you time, and it's giving you value. Right. So this is the market profile TPO chart is a very, very important tool as a trader to use. Again, you're not just focusing on price only that a plain candlestick gives you. And not to go too far into what my last video, and I'll post it on here too for reference, but a plain candlestick only focuses on price. When you're going into professional tools, professional way of trading, it's not all about price. It's about the value of it. Just for an example, if you was in the market to buy a Mustang, and for whatever reason, the dealer is selling a Mustang for $150,000, right? That's just the price, right? But is that Mustang worth $150,000? Well, you, the buyer, determine that, right? You and other buyers out there who are looking for a Mustang will determine whether that Mustang is worth 150,000. If no one is buying that Mustang for 150, you know what the dealer is going to do? That dealer is going to drop the price because the value of IWM, I'm sorry, the value of the Mustang is in this example is not worth 150. So they're going to drop it. Let's say they drop it down to 100. Still no one buys it. Okay. So that means other participants who are in the market for a Mustang still feels like $100,000 is too much. It's not worth $100,000. So they drop it. The dealer drops it down to 75,000. The next thing you know, there are they can't keep the Mustangs in the dealership because other participants who are in the market for a Mustang say, 75,000 is a great price. It's definitely worth that. I'm gonna buy up. So again, market profile is the same way. It doesn't just focus on price, but it also gives you an insight on value. Do other participants in this market looking at IWM, whether you again trade Nvidia, Amazon, whatever, do other participants feel that auction that you participated in, is it worth that price? And if it's not, prices are going to fall. If it is, prices are going to rise because there's more people willing to buy, which means the dealer can charge more because there's a demand for it. Hopefully that helps and that explains market profile and why this tool is very, very important. All right, so here is the traditional way of looking at it. Like I said, you can find trend. Well, the right way of trend. I know trend in a retail way of thinking, trend is solely about price. If it's trending up in price, that means it's trending higher or an uptrend. If price is trending down in a retail way of thinking, that means price, the whatever you're trading is trending down. But actually, the real trend is in value. So just focusing on these three trends, I mean, these three profiles here, the 23rd, the 24th, and the 26th, we can see that value, again, which is the 70% of that day, this bluish grayish box between value high and value low is trending up. Okay. So the value of IWM in this case is trending higher. Now, from the 26th, the 27th, and the 30th, you can see value is trending down. So it's not solely about price, it's also about value. Value is trending down. That's the true trend. Okay. So hopefully that helps help you guys understand and see the value of market profile, especially in the traditional way of looking at it. Now let's look at it in a split. And we're going to focus on this one. And let's see, split. And here is the introduction of not only the split, but also the letters, right? So again, each letter represents 30 minutes, right? Market profile is a neat way of putting the entire day's action or the entire day's transactions between buyers and sellers in a nice, easy, understand, remove all the junk, just focus on what actually happened, what transactions actually took place that day. Now, when you take it and make it a split profile, now you're understanding even more information. So I am going to, let's just focus. I know I have an arrow here, but because we have so many jumbled up, let's focus on the last one, which was yesterday's profile. And I know yesterday the market closed early. So we're not going to get all of it. Okay. So let's focus on this profile here, which was yesterday, December 31st. So happy new year to everyone. I know this is the first of the year. So happy new year, everyone. All right, so we can see just in this profile and the split profile, we're now introducing the letters. Again, each letter represents 30 minutes. All right, A period is from 9:30 to 10. B period is 10 to 10:30, so on and so on. Okay, until we get to the M period, which is the last 30 minutes of the trading day from 9:30 to 4, which we call cash open, cash close. All right. So each letter represents 30 minutes. And we can see at the open, it opened, which is a zero. Let me make it a little bigger, hopefully right here. All right. Hopefully that you guys can see that clearer. All right, here's the open. All right, that was roughly 222.12. Okay. And here's the all of the action of the A period right here. Right. A period came all the way up to roughly 222.37 and all the way down to 221.12. B period opened at 221.60 and went all the way up to 223.38, as you can see, B period, right? Because it almost mocks like a candle, right? This is look at it as a each like look at it as a 30-minute candle. Okay. Here's B period. C period is another candle. Let's look at it as a candle. C period opened, I don't know, roughly, let's see. C period opened, it could tell me up here. As I hover over it, C period opened at 222.85. It went as high as 222.91 and as low as 221.84, right? And then D period, C period, E period, F period, so on and so on. So what is it showing you, right? Again, we're seeing 30-minute time frames or 30-minute periods, but it also is telling you how long price stayed in these areas, right? So let's look at this the second 30 minutes, which is the B period. We can see price opened at 222.26, but it also went as high as 223.28. But how long did it stay there, right? Only one TPO or one 30-minute time frame stayed in that area. So let's box that up real quick. From here to roughly there. I'm gonna get rid of this arrow to make it a little easier. So right here, right? Only it was and it probably wasn't a whole 30 minutes. I doubt it was because this whole thing is represents 30 minutes, but this could be 10 minutes of that 30 minutes. Price stayed between, let's say, roughly 223 47 down to 222.96. It didn't stay here long. And then the next period, which is the C period, didn't even attempt to go up there, right? The highest of the C period was 222.91. So price didn't stay here that long. So what is that telling you? That's telling you that when price or let's say buyers in this case, because it was buyers rolled price all the way up here or drove price all the way up here, but felt once price got up there, felt like, you know what? IWM in this case is not worth 223.50 or 223.30 or even 223.07, right? So then new money came in this case sellers, and they drove the price down, right? So price didn't stay here that long because what other participants that was in the market for IWM felt that price was too high up here. And another way you can predict that or even get an idea of where the market direction may be, look over to the left. Look at this profile here of the 27th. What happened in this area, in this B period, right? In this 30-minute B period, price opened at 224.45, went as high as 224.51, and went as low as 221.49. Buyers opened on the A period here The B period didn't even attempt to go up here. So let me make another box here, right? This is as high as the B period went, right? You can see this the B period here for the 27th. A period drove prices all the way up to 225 40s, 225 30 20s. But B period said, you know what? IWM is too high here. Right? Other market participants felt that IWM was not worth 225 40, 225 50, 30, or 20. So you know what it did the second 30 minutes? Sellers came in and drove price down. And C period didn't even attempt to go nowhere near it, right? So now you're getting more information with the split. So the traditional way of looking at it, you were getting trend, and you still can get trend from the split, right? You're still seeing the gray period or the gray area between value high and value low. You can still see the value is falling as well as price, but you're getting just a little bit more insight of the day, what happened with other transactions between buyers and sellers. What happened? What did the buyers feel and what did the sellers feel? In this case, on the 27th, you can see that we opened to 24.29. Buyers bought up to as high as 225.44. But when it got there, other participants in the market in this auction of IWM felt that IWM was not worth 225.50, 225.40, 225.30. So they dropped the prices, right? They couldn't find anybody to continue to buy at those prices, so they had to drop it. So when you come into yesterday's profile, the next time price comes anywhere near here, right? What happened? B period. Prices drove or buyers drove prices up to the 223.40s, 223.50, 223.30, and then dropped it, right? Because value area, right? This is the 70% of value. When it got outside of the high value high, and you can see what happened the day before, or in this case, the 27th, buyers were not buying in this area at all, not even nowhere near it. So next time prices get up into an area where prices dropped from the last transactions on the 27th, what are you going to do? You're going to drop down with it. You're going to follow what other participants, the majority of what other participants had done in the past. This is why market profile is such a crucial tool to use when trading. It's something that has been used um, well before me, well before the computer trading, electronic trading. This is something again has been used in the pit of the New York Stock Exchange well before we were able to do it ourselves, before we were able to self trade. So if this is something that was done by professional traders and is still being used by professional traders, just in a different way, we're just able now, we drop the notepad to be able to log in and see a nice little neat way of how buyers and sellers transactions, how they transaction, how they traded the market that day is what I'm trying to say. We get to see in real time what happened that day. Nice, neat way of looking at it. Instead of looking at plain candlesticks, and I don't want to go back to it, what kind of it gives you a lot of information, but it also gives you useless information when you're looking at plain candlesticks. But when you're looking at market profile, all of this is market generated information. This is not um, random. And let me see if I can find one real quick. Let's see if I can find the trend line. Oh, you know what? I don't have to do that. Here. Um, here. Like this is not a random trend line. Oh, did it not let me do it? Nope. Hold on. Let me click it again. That's a regular line. Hold on. Let me find the right one. There we go. So this is not a random trend line that no one sees on the chart but you. Like if I wasn't recording, I am the only one that can see that. And I don't know if I'm even right. I'm just placing it there, here. I place it up here, down here. No one sees that trend line but you. That is not a market generated information. That's you generating that information that no one else sees but you. But what you're seeing market profile is this information that is generated by other buyers and sellers. They're buying and selling transactions that happen in a neat little way of putting it for the entire day. All right, guys. So I hope this little beginner's conversation about market profile helps. Again, I'm going to post in the uh, description two books that really helped me understand market profile. And I can't remember the author's name, but I promise you it will be in the description. Please pick those up. I don't get paid for it. This is not a promotional thing. This is just something that, for one, those books were assigned to me, and two, they helped me tremendously. And if you want to trade like a professional, please drop the plain candlesticks and pick up tools that actual professional traders use to trade. I know you guys see other YouTube videos, and I'm not here to bash anybody, but they always say, let's follow the smart money. Let's trade like the professionals. But yet they don't use professional tools to trade like professionals. So use your logic, use your brain. If you want to trade like a professional, you actually have to do what the professionals do, not just say the words trade like a professional. All right. So again, this is David with Alexander Trade and Investment Group. Just giving a little beginner's knowledge on market profile and how I use it. You can also, and I didn't talk about this earlier, you can see, and it kind of did. You can see when new money comes in. Again, if we're just focusing on this TPO chart of December 31st, you can see prices went all the way up to 223.28 before new money came and dropped it, right? So if you looked at videos that I posted of me recording myself trade, you may have heard me say, I think this is where new money is coming in. You can kind of tell, or you can tell through the market profile where business was being done and where business stopped being done. Those are all, new money or old money, depending on what you're looking at. If new money is coming in to either drive prices up continuously or to reverse, or vice versa, new money coming in to drop prices lower or to reverse from a swing high to swing down. All right. As always, guys, I hope you guys find value in my videos. I pray that you guys learn something new as I go on my journey continuously to be a better trader. I'm learning something new every day. I learn something new about myself as I trade every day. And this channel right here solely is just to document my journey as a trader. I'm not here to sell you any courses, which I think is a red flag if you ever run against any other two YouTube channels that are trying to sell you a course. I don't have a Discord. I'm not interested in that. This is just my blog journaling my journey as a trader. And I hope in my journey it's helping you in yours. All right. Until next time, guys, have a great rest of your New Year's Day. By the time this video comes out, it will be January the 2nd. But I hope you guys are having a great New Year's start of 2025. More blessings, more peace, more health, more accomplishments, more family, and more love. Till next time, peace.